Hello and welcome everyone to our live event today, the 2025 Federal Budget Update. I'm trying to be more exciting because it wasn't a very exciting budget, but hopefully we'll inject some excitement and a bit of fun today for you. So this event is brought to you by Tax Nuggets Academy. I'm Joyce, founder and CEO, and I'm your host for today. So welcome back to our subscribers. Good to see you all, our Nuggeteers. I see a strong Melbourne crowd today. Welcome. And if it's the first Nuggets event for you, it's great to have you with us. So just a bit of housekeeping. As usual, the chats are open. Let us know where you're joining in from. Feel free to put in your comments, your banter, your insights in there. But if you have a question for our instructor, please put it into the Q&A section, which is separate from the chat so that I can look out for it. And just a bit of background for those that are new to us. We are a tax training platform for SME accountants. And we're subscription based. So we're like all you can eat, like Netflix. So for $50 per person per month, you can access all our webinars, which we run 5 a week. And also you can access our entire catalog of previous recordings, all recordings that we've ever done, including monthly tax updates, special topics, and even structured programs like our company tax fundamentals program, which starts next month. And we also have things like a graduate program, FBT, a program every month, basically. So head to taxnuggetsacademy.com.au to check us out. So let me introduce you to our instructor today. He is the managing director at Velocity Legal. He lives and breathes tax and specializes in private groups, tax disputes, and complex tax advice. So please put your emoji hands together to give a very warm welcome to Andrew Henshaw. Hi, Andrew.
Hello. Hi, Joyce. Hi, Nuggeteers.
Hopefully, it wasn't how exciting the budget was that kept you awake last night,
No,
Andrew.
no. I can see the comments already streaming in. Sam says worst budget of this century. So we've got an early contender for the prize. But no, it wasn't. Someone asked me sort of an hour before 7:30 whether I was excited, and I was just honest, and I said no, I'm not excited. I don't think there's going to be anything in it.
Yep, yep. But what are we covering then?
Well, there are some things in it. I mean, I've said, look, there's nothing in it, but there are some things in it, and they're important to be across these things. I think with the election coming, and it hasn't been announced yet, but I think the analysts are predicting that has to be announced in the next week or 2 or 3, and then the election has to be held by the 17th of May. We could, depending on how that election goes, we could be having another budget discussion, perhaps a little bit later in the year. But we've got what we've got, and let's work through it. I'm happy to take Q&A throughout the session. I'm going to struggle to fill an hour with this content, so if anyone's got anything that they want to raise, then feel free to do so. So. Importantly, there's a prize. So think about how you describe the budget in a hashtag, share it at the end, and you can have your chance of winning one of these delightful Tax Nugget mugs.
Yeah, and it will be personalized as well. So we'll ask you to put, what name you want on it. I think, Andrew, you have one, I
Yep,
think,
I
or
do,
maybe
I
you have a
do.
different version.
Yep.
Yeah, just a little bit of fun. And yeah, so you can't get these mugs anywhere. So it's limited edition. So yeah,
Priceless, I would say.
keep focused today, so that yeah, you can think of a good hashtag.
All right. So I guess at a glance, taking sort of the big picture economist sort of perspective, there's lots of there's budget deficits as far as the eye can see and as far as can be forecasted. So in the budget, they do 4 years worth of projections, and all of those 4 years project significant budget deficits. We're talking $30-40 billion each year. So that's sort of the landscape we're working towards. And we've had a series of deficits. There was 2 years of surpluses. So there's very little, I guess, kind of sugar hit levers that can be pulled. With that in mind, there is pretty minimal support for small businesses, which we'll get into. And there's little of substance. There's a few things, but overall, it's not the most complicated to unpack. And, the conversations with clients might be, perhaps easier this year than in some previous years.
Wasn't there a bit of doubt whether there was going to be a budget in the first place before the election?
Yeah, well, I think it was kind of because of our weird electoral system, like we don't have a fixed, not like America where it's like a fixed 4-year term. It's this kind of unusual floating period where an election has to happen by this date, but it can't happen before this date. And it's kind of like, depending on when the government wants to call the election will depend on then when the budget stuff's done, because the budget's usually done in May, and we're in March. So yeah, you're absolutely right. I think once it passed the point that they didn't call it by a certain date, then it was like, okay, we're going to have to do a budget beforehand.
I see.
Yeah, someone's put in that the cyclone in Brisbane, affected it, calling the election first.
Understand. Okay.
Yep. So I guess probably the biggest ticket item is there's unexpected personal income tax rates, which weren't leaked beforehand, weren't really talked about beforehand, I don't think at all. So it came as, I guess, a little bit of a surprise. This is this whole sort of Jim Chalmers giving you $5 a day. People have described it as, it's a coffee and a couple of biscuits, as people do. But the technical announcement is, we've got the marginal rates of tax for individuals. The first, there's a tax-free threshold for residents, and then the first rate for residents after that is the band from $18,201 to $45,000. That's currently 16%. The announcement is essentially that 16% rate will drop first to 15% and then to 14%. It doesn't apply to non-residents because they don't get this rate anyway. They start at a higher rate, and it's described as every taxpayer gets a tax cut, which my cynical view is that's how exactly it was propositioned, that we're giving everyone a tax cut, everyone gets a win, because everyone who does pay tax does get a tax cut. If you're below that, your tax-free threshold, you're above that, you're going to get at least, a 1 cent saving. So I think what's interesting about this is practitioners remember we had like a low and middle income tax offset, LMITO. Sometimes Lamington as well. Now that doesn't exist anymore, and this is not that type of measure either, because this applies to everyone. Assuming it goes through, it applies to everyone. There's not a cap, there's not a cutoff, all that sort of stuff. And it's interesting that it's not a bracket creep measure, because with the tax brackets, of course, we have inflation, we have people's salaries, increasing over time, at least hopefully with inflation, and that could push people into upper brackets. And there was some work done last year about some of those in the 200,000, which became 190. But it's not a bracket creep measure at all. It's just a reduction in the rate. You might think, well, this is kind of guaranteed to go through. The dates are far enough out that it can sort of be cancelled. And I believe the coalition have already come out and said that they're not going to support it. I believe. So I guess the question is, will it happen at all? So, you might not get that coffee and biscuits.
Yeah.
Yeah, it's worked out about if you use the full assuming your income's at least $45,000, it's about $250 in the first year as a saving and $500 in the second and subsequent years.
Yeah, that's not even enough to support my coffee addiction, unfortunately.
I got a
Not
copy
in
this
Melbourne.
morning. It was
certainly.
$5.70. So yeah, they can come and out of that.
Well, anyway, those are active on the chat. Let us know what you think. Is this a good measure, or is it just buying some votes potentially?
And even though it doesn't sound like a lot, because it applies to everyone, it actually is a big number for the budget itself because it applies to everyone. It's been a trend of the last couple of budgets where there's been various announcements about ATO compliance programs. This one is no different, and it includes, and I think politically, I think these work quite well because the government can essentially say, I'm going to put this much funding into this, and I'm going to get this much, we expect to get this much back from that through, increased revenue, penalties, etc. So it's an easy sell because it's like you don't have to change laws. Not all we're doing is, you can play it up as just we're just administering the laws as they should be administered. So there's almost $1 billion. I sort of wonder why 999 million. Why didn't they just make it $1 billion? But it's 999 million. The lion's share of it is they're being described as expansions and extensions, and so it's a bit unclear exactly what that means. Some of it's extending it by 1 year, and some of it's referring to it as expanding. So I would just take that as more resourcing for the Tax Avoidance Task Force, the Shadow Economy Compliance Program, the Personal Income Compliance Program, and the Tax Integrity Program, and the lion's share of that being for the Tax Avoidance Task Force. If anyone's haven't dealt with any of these, I think the reality is it's just going to lead to more audit and more activity, and some of that's possibly a good thing. I have been involved in situations where it's people are caught up in things and it's really just an extra expense for them. They're not doing the wrong thing. They're just caught up in one of these programs and meaning more work for advisors, more work for lawyers. The challenging thing, and the thing I found in practice, is that more and more the ATO are leading into onus and burden of proof issues where essentially they say, well, can't prove it, too bad. So I think that's one of the sort of takeaways. Just expect more. Maybe it's a discussion about audit insurance, things like that. But expect more, ATO compliance activities.
Do we know if any of these are specifically for the SME space? Like how much of the tax avoidance task force particularly relates to SME? Was there a breakdown at all?
No, well, in the budget measure, when I was talking about the tax avoidance task force, it mentioned, this is to ensure, multinationals and large taxpayers, pay their fair share. But I wonder whether that was just kind of like a political statement to make it easier, because it's easy to be it's easy for large taxpayers and multinationals to be punching bags. Because I have seen tax avoidance task force stuff on, SMEs, professional practitioners, one with just allocation of firm profits, and it was from the tax avoidance task force.
Okay, understand. Okay, so
I wouldn't assume that it's just going to be for the top end of town. I think it's just easy as a bit of a punching bag.
Understand.
So the next measure is there's been a 2-year ban announced on foreign persons purchasing established residential dwellings from 1 April 2025. Now, these persons would have had to get further approval anyway, but now it's sort of blanket ban. You can't even do that. It covers temporary residents too, so people who are here on skilled kind of migration visas. That's probably the biggest impact. That if someone's here on a 4-year, 5-year skilled migration type visa, they're not permitted to buy established residential dwellings. They can still buy new residential, but not established for 2 years.
Yeah. So it's like they arrive in Australia for the first 2 years and they can't purchase. But then after 2 years, they might be able to apply to FIRB.
Correct.
Yeah, understand.
Yep, correct. Now there's still exemptions. New Zealanders a lot of the time can be temporary residents, so it's addressed as covering temporary residents, and it sort of made you think, oh well, does this cover New Zealanders? It's clear that exemptions still remain for New Zealanders and for people who have spouses, but it's a couple and one's not a citizen or PR of Australia or New Zealand. So there's exemptions there. There's exemptions for significant developments, and it's qualified essentially like it's a contribution to housing stock type. Covers foreign trusts, covers foreign companies as well. So it's sort of across the board. Related to that, there's an announcement that there's an increase in funding for compliance activities for foreign persons who bought land and the FIRB conditions are around they've got to develop the land within this period of time. So there's some concerns that that's not happening, and essentially land banking is happening, and sort of an increasing compliance activity basically for foreign persons who purchased land who haven't done anything with it, essentially.
Understand. But the ban is more for established residential, right? And so if it's new residential, that's still okay.
Correct.
Understand.
New residential is not covered by it. And new residential, there's always been that distinction between existing residential and new residential being far easier to purchase anyway. And then, of course, we have all the, foreign purchaser surcharges anyway, which make it not particularly attractive anyway. So does this do anything in terms of moving the needle? Probably not. But, it's easy to put an announcement there and say we're helping with the housing crisis because, there's this ban. Anyway, I'll try to stop being so skeptical, but it's difficult.
You're allowed to be yourself completely on tax nuggets.
Yeah. Good. Yeah, well, nothing worse than when it's sort of dry and no personality, right?
Yes, exactly.
Continuing the punching bag, the next target is tax agents. Because they haven't had enough in recent times. So it's another sort of continuation of the PwC fallout, which I kind of liken to like this rolling ball that just keeps gathering momentum. It can't be stopped, can't be slowed down. It just keeps on getting bigger and bigger and bigger. Sort of like when the PwC thing happened, nothing really happened for a while, and then the Peter Collins news broke, and then that's how it got out, and then it's kind of just keeps going and going and going. The announcements in the budget that are in respect of TASA issues are, there's a report and recommendation done in 2019, sort of essentially a review of the TPB and some recommendations about, which some of them have already been picked up in the ministerial determinations or like code change stuff that's happened. This is about firstly strengthening sanctions available to the TPB. That was contained in the report that sometimes the sanctions that the TPB can actually use don't really work. Like it's pretty slow moving, and they need a few more options. So that's the measure. It looks like they're going to adopt those recommendations. There's a statement about modernising the registration framework. I don't really know what that exactly means, but moving it to some modern system. And there's an increased funding for the TPB to undertake additional compliance activity targeting high-risk tax practitioners over 4 years. It's stated all these things are subject to TPB consultation, but I just read this as more resources for the TPB to undertake further activity. The TPB don't particularly have a lot of funding. If you compare the TPB to the ATO, for example, it's a drop in the water. What funding they have available to them. So, I think it's actually probably yes. While there is that kind of keep going after tax agents, it's potentially not a bad thing that they have enough resources to go after the people who are deliberately doing the wrong thing. And you do hear about these things. So hopefully it actually makes things better for everyone else.
Lifts up the whole quality of
Yeah,
the system,
yeah,
right?
yeah.
Yeah. Do we know how much funding? Is it anything to
It's
remember?
not huge. I have to check what the figure is. It's in the millions, not the billions. Like I think it's probably in the tens of millions. Yeah, yeah.
Okay. Yeah, so it's some funding for them to still go after the high risk practitioners, but I'm guessing that part of it will be used to administer the new TASA roles as well, because that's a
Probably.
lot of administering required.
Yeah. Well, that's the thing about those new rules. Essentially, well, NB don't really have that much resources.
Mm.
So, yeah.
All
Uh,
right, we shall watch this space.
so this is a non-tax one, but it's probably one of the bigger actual things in the budget that the government did it was sort of like a productivity and competition review. And one thing that was noted, it's a little while back, I think 2023, that there's a huge trend and number of non-compete clauses in employment contracts, including in situations where it's kind of like surprising that that would be there, I think. And they refer to um, childcare and lower lower paid industries and professions, essentially.
Mhm.
So now the interesting thing is here, it's been unusual. It sort of struck me that the estimate is there's 3 million Australians subject to non-compete clauses, which is a massive figure. Like that's huge. I say 1 in 5. So it's huge what that is. And it's a bit of an interesting area because at law, a restraint of trade is presumed as invalid and unenforceable. And the reason for that is that, well, like from a policy perspective, like individuals have like a freedom to work wherever they want. Like that's a policy objective. So anything that takes away from that should be sort of thrown out unless the employer can demonstrate it's reasonably necessary to protect that interest. Now, the challenge is though, well, you can have lawyers, go up and go, oh, well, it's it's in the contract, but it's unenforceable. But if you're the employee, you just read it, and you don't have a choice, or that's not negotiated, or there's a risk, and do you want to be the one, and all that sort of stuff. So I agree, it's far easier just to say it's banned, rather than worry about this kind of legal presumptions and so forth. So. And if you want to do some reading about this, just Google non-compete hairdresser. And there was a case where there's a 2-year, someone tried to put a 2-year post-employment restraint on a hairdresser.
Jeez, what are they going to do? That's crazy.
Yeah. And then they brought court action and so forth. I mean, they brought court action saying, oh, they posted on Facebook that they've terminated, and that, they're starting their own business, and, blah, blah, blah. So, as you could expect, that was thrown out, that's definitely not enforceable. But, yeah, and there's an AFR article about it as well. But have a look at that. What this announcement does is say, if the person's not a high income earner as defined in the Fair Work Act, which is currently 175,000, it's banned. You can't use it at all. And that's pretty significant because one, there'll be all these contracts out there at the moment that have issues. And I suspect there will be some sort of penalty regime around it as well, because if it's banned, then, you need to have a consequence for, trying to flout it, basically. So the announcement says that consultation is going to occur on the policy details concerning the non-compete, including exemptions, penalties, and transitional arrangements. So I personally think it's probably a good thing. I mean, it's been criticised by some business lobbies, but um, if someone's putting the 2-year restraint on a hairdresser, like, that's just insane. And there should be penalties for doing something like that. You can question how far it should go, and should it be 100,000, 150, 175? But there should be a point where it's essentially like, no, this is acting as a ball and chain on somebody. So now none of this goes to other things, stealing confidential information, taking clients' lists, soliciting, non-solicits as we call them, which is around, trying to take employees or trying to take customers or contact customers or that. That's different. So it says those are not affected by any of this. And in respect of those, there's going to be some further consultation about non-solicit clauses generally, and non-compete clauses for high income earners.
Yeah, this gives a bit of power back to the average people, right? And trying not to, to protect their rights a bit more.
Yeah. So I
But
expect what this will look like is that, maybe there's going to be a bit more focus on those non-solicit. Well, there has to be more focus on those non-solicits, and that's the area where you have to bring action rather than a non-compete. And of course, it's different if it's high income person, if it's someone selling their business, all those type of situations. But if we're talking about someone who's pure salary, childcare worker, like, why should they be subject to a non-compete? Like,
exactly. But unfortunately, the repercussions for the broader business community is quite huge, I think. So we shall see if this one sticks around after the election.
Yeah. That's an interesting one because they're getting sort of, comments either way on it. So it's fine, provoking debate at least. Which is better than, there's some of the other announcements in the budget. So this one's pretty small, but it is something that was addressed towards small businesses and franchisees. It seems that the main focus here, the dollars are very small, but the main focus is around actual franchisees. So franchising has all particular regulations. There's a franchising code. There's all these sort of disclosure obligations, and there can be issues in franchising where there's a very large power imbalance between the franchisor and the franchisee. Issues about, where's the money go? Like, why do I have to kick in money for marketing and advertising, or your efforts to try to sign up new franchisees? So there's a bit of money, not a lot, but a little bit of money, $7 million, to strengthen the ACCC's enforcement of the franchising code. It's a very small amount, so whether that does anything and moves the needle at all, well, it's to be seen. There's some discussion about data analytics, illegal fee mixing activity, and then some really small numbers around, hey, Treasury, go and have a think about how could we extend the unfair trading practices to small businesses in respect of unfair contract terms, things like that. Now, unfair contracts do apply to small businesses already, so I'm not sure exactly where this is going, if anywhere. It's not a heck of a lot of money anyway, but I thought I was debating not putting it in at all, but I thought about something about small business, so I'll mention.
Yeah. What's next?
So next up is foreign resident CGT measures. Now, last year, there was sort of some unexpected announcements regarding some of the technical aspects of how CGT works for foreign residents. Now, of course, foreign residents are not subject to, the policy is that foreign residents are subject to CGT on taxable Australian property, which is generally land. It could be shares in companies that hold land, and it could be, things related to that, like mining rights and things that aren't technically land, but they're very close to sort of being land. The announcement here is that those changes are being deferred until the later of 1 October 2025 or the first quarter after the legislation's passed. So whether we'll see the light of day on this, it's to be seen. What those measures were was about expanding the scope of what type of assets would be subject to CGT for foreign residents. It was a bit unclear what exactly they were getting at, but it looks like it's sort of looking at things like mining rights and things like that, about what's covered by the regime. And there was some suggested changes around when you're looking at, like, if a foreign person disposes of shares or units, what you have to work out is whether or not the time of the shares or units being disposed of, whether there's taxable Australian property, and if so, how much. The second part of the announcement was about changing from a point in time to a 365-day assessment, presumably to avoid kind of moving it a little bit at the end to get out of it, basically. Probably the biggest one of those was that there was an ATO notification requirement proposed. So when foreign residents dispose of shares or units worth over 20 million, the previous announcement was that they must notify the ATO before the transaction occurs. Essentially, it's sort of like seek approval, basically, which has been interesting because that could cover lots of transactions that have nothing to do with land at all. I suspect that's probably the thing that it's probably hardest to work through, and that's why we don't really have any. It was supposed to happen from 1 July 2025, and it's going to happen from a later date, when it happens, if it happens.
Yep. Nothing earth-shattering there.
No. There's been some changes with student debt. These are actually somewhat significant. So firstly, there's a 20% reduction in student debt, which amounts to $16 billion from student loan accounts for around 3 million Australians. So if you've got a HECS debt, it's reduced by 20%. Fortunately, I paid mine off already.
Too early.
There's no refund, unfortunately. Yes. We were having a chat in the office last night about this one, and saying, where's my refund for mine? And then someone else chimed in and said, well, all these politicians, they got their uni for free, so maybe we should all get a refund. Anyway, so there's a reduction in student debt. There's an increase, quite a significant increase in the minimum repayment threshold. It goes from 54,000 to 67,000, which is a pretty big change. 13,000, 20% increase. So that means that those compulsory student loan repayments will start at a much higher threshold. And then the final change is changing the basis on which the repayments are calculated. And so at the moment, how it works is it's based on a percentage of you work out what your income is, and it's basically between about 54,000 and around about 150,000. There's different percentages, and it goes from 1 to 10%. So if you earn 80,000, let's say it's 3%. So it's 3% of 80,000. That's your repayment. And then when you move up, you might earn an extra 5,000, but now you're on a 4% rate, and it applies 4% of 85,000. So sometimes you can kind of go up in salary, but backwards in terms of sort of take-home pay, because you've moved into a different category that then brings in a percent over everything. Which, you might have to pay it anyway, and maybe it's a good thing, but they're recutting that essentially to be like a marginal system, kind of like the income tax system. So how it's basically going to work is that there's only payments above that $67,000 threshold.
Yep. Understand.
And they're actually quite big numbers for these marginal rates. So below 67,000, it's a 0% repayment. Once you get above that,
that's huge change.
Yeah. It's 15 cents in the dollar above that. And then once you go over 125, it's 17. It's the 15% rate plus the 17% rate. So I know it's not a tax, it's a repayment of a student debt, but if you're looking at someone that's they've gone to a situation where they're now earning significant sums, maybe they're on the top marginal rate, plus they've also got a 17% rate of repayment as well. That's what, 64 percent at that point, 47%
Right.
tax.
And so this is why the 20% reduction is needed.
Wow. Yeah.
I would say, right? It's quite a big change. Gosh.
Yeah. Yeah, it is. It is quite a significant change. Now, under the old rate, it would have capped out at like 10%. So 200,000 should be 20,000. So I guess, what's this going to do? It looks like it's going to be less payments for someone on a lower income, which maybe is a bad thing anyway, because they're going to go up over time anyway. Yes, they go up at CPI, but they do still go up, and then potentially with kind of bigger payments. Maybe
But you can always voluntarily pay back more.
Yeah.
Yeah.
Yes. Yeah. There used to be discounts for that,
Not anymore.
but there's not anymore.
Okay. Where is all this coming from, Andrew? Do you know?
Well, I think the student debt point, well, where is it coming from?
Is it universities need to be repaid quicker? Or
I think there are some issues with it being those percent, those sort of moving from brackets type issue. And they probably then had to model something that's going to collect overall about the same anyway. So there's not going to change, when money comes back. Maybe that's how they've come up with it. And the 20% thing's just, I guess it's just a handout, I guess.
Do you know if the coalition has said they would support this?
I think it's a bit unclear whether they are going to or not. I said last night, I think the coalition would be pretty brave not to support the 20% reduction in student debts, because, I think that would be, it'd be like a wedge issue. It'd be like, coalition doesn't support, coalition already doesn't have a good vote percentage with, if you look at the, who votes for what parties, there's a definite skewing. As the older someone gets, the more likely they are to vote Liberal, basically. So they already have an issue there. I can't imagine they would want to make that worse. So
cool. Let's watch this space. Hopefully it will stick around. The 20% reduction, particularly. Helps with the cost of living crisis, I presume.
So probably the most surprising one is that I fully expected that there'd be an instant asset write-off extension. I was getting it ready to say, I'm happy to write the piece about the instant asset write-off, because I can just take what I did last year and change the name. For those that don't know, the instant asset write-offs has had a long and storied history. It's been around almost for 15 years, and it's moved over time, but it's been 20,000 since 2015. Let's say 10 years. When we had the COVID craziness, it went up, and it went all the way to 150, and then we had temporary full expensing. Now we have all these weird balance sheets. Then it went back to 20,000, and it was extended year on year for the last two budgets. So I expected that they were going to just extend it further. There's no mention of it at all, which another commentator said, well, that either means that they're going to make it permanent or they're going to get rid of it. I can't see how they're going to make it permanent, given that if they were to do that, they would have to include it in the estimates and the projections and all that sort of stuff. So I look at the moment like it's the end. this is the end.
Yeah, it's very surprising because yeah, it's not supporting small businesses. Like usually you just put it in, right?
Yeah.
And show that you've supported small business. But maybe the 20K entertainment
Yeah.
deduction thing has taken up all their budget.
It's been a bit of a cluster because the one that's for the current period hasn't even become law yet. And this same thing happened last year as well, that it was like very late in the income year that it actually passed. So um, this same thing is happening again. And it's a bit of a it's a bit embarrassing, to be honest.
What? Why? It's not new. It's like it's just a rehash, right?
Yeah, and I don't really understand why you wouldn't just make this permanent at 20,000 or permanent at 20,000 with CPI increases in,
Mm,
1 or 2 or 5K blocks.
mm,
Um, because, so something I see in practice now is that, we've got these balance sheets with temporary full expensing, and then sometimes the assets aren't included in the balance sheet. Sometimes sometimes they are, sometimes they aren't. And there can be all kinds of differences when people go to sell their businesses. Some of it's been, temporary full expense, some of it hasn't, because it, predates those periods. And I think everyone would benefit from keeping the rules consistent. Um,
Oh yeah.
yeah, yeah,
I can only imagine poor tax agents that have to do legacy tax returns. Like, let's say a client has forgotten to do their tax returns for the last 6 years. Oh my goodness. You have to go
yeah,
through the whole year by
yeah.
year. It's all different.
Absolutely, absolutely. So I guess it's sort of what's not there. It's a pretty big list of what's not there. There's a lot of things out there that they've been in discussion, they've been in the pipeline, but they're kind of sitting in, they're sitting in the ether sort of thing, or they're in limbo. Um, so the Division 7A reform, I mean, this is on there every single year, because
Since
there's been
2013.
there's been announcements that things are going to change. I mean, 2018 they announced that UPEs were going to become loans, which just kind of gone nowhere. There's nothing. I didn't expect there would be, but there's nothing to negate the outcome in Bendel or anything like that. There's no mention of Division 7A. Perhaps that's something that's going to happen maybe once the High Court litigation for Bendel's
Mhm,
decided.
mhm, mhm.
Um, uh, no mention of the tax residency rules. So for individuals, been proposed to codify the rules. That has sat there for a little while now. And also with companies, there's a bit of the rules don't work really for foreign companies. There's issues about whether a foreign company will be a resident of Australia, and the issue's been around for like 7 years now, and it's sort of like everyone kind of pretends it's not an issue. I think it's probably the easiest way to describe it. Um, so, because a foreign company can be a resident of Australia, if the CMC or the management of that company is in Australia, which kind of leads to all kinds of issues, even if it doesn't carry on business itself in a practical sense in Australia.
Mhm.
There's been reviews of CGT rollovers, demerger rollover relief. None of that's gone anywhere. There's nothing about small business CGT concessions. All those thresholds stay the same, as does all small business restructure with all its problems. Nothing about 100A, although, I think if there was anything, it would be something that strengthens it anyway. So sometimes that's kind of be careful what you wish for. Nothing about taxation of trusts. Nothing about trust loss rules or any of the issues about the family trust distributions tax and some of the problems and deficiencies with it, about previous elections that can't be found and unlimited periods of review and all that kind of stuff.
Mm.
296 tax, nothing about that. Now, remember, this is the one where the government announced that they were going to do the Division 296 super tax, increase the tax on super funds from 15 to 30% above the balances, components of the balances above 3 million. That legislation failed to pass. There's nothing about that plan or where it goes from here.
Okay.
Uh,
Coalition is definitely not supporting that one, correct?
No, yeah. I think there are two main issues with it. One was that it was there's no indexation, and two, there was issues about unrealized capital gains, and also lack of 50% discount for those unrealized capital gains. So uh,
Mm.
I don't know. Perhaps if those issues are fixed, it would get through. But who knows? There's no plan in there. There's nothing in there about the plan for it.
Okay. So we're
Uh,
just gonna just sit tight until the election, right? Pretty
I
much.
think so. I think so. Although it's not like the yeah. I think it's possibly dead. I don't know. There's other measures that were previously shelved, like restricting negative gearing, franking credits, restricting those,
Mm.
50% discount. I think it's possibly might be in that category. I guess we'll wait and see. Um, there was also a plan to apply penalties to those mischaractering or undervaluing royalty payments. This is sort of more a top end of town issue. That's to apply from 1 July 26. That's still a little while out, but there's nothing in there on that either. I'll move on to double up on the slide.
Oh yeah, definitely nothing on negative gearing.
And politically, they wouldn't introducing something like that 2 months before an election is a short line to make sure that
You lose
that-
the election.
yeah, yeah.
All right. So I think that's all the content slides, isn't it? Really not that exciting, unfortunately. I think the biggest controversy was around the non-compete clause, and then we've got just a few questions around the student debt, which we will get into Q&A very shortly. But just for those that are new to us, if you found this session useful, you're welcome to start a free trial with us. Go to taxnuggetsacademy.com.au. We also have a team subscription for your firm if you're interested. Also, we have our next free live event is on the 9th of April, and it's about AI for accounting firms. What you should be doing right now about AI, not about predictions about what it could possibly be doing tomorrow or in 10 years' time, but what you should be doing now so that your firm doesn't get left behind. So, link is in the chat for you all to register for that one if you're keen to come along. And finally, yeah, let's do the best hashtag. People get ready, and then we'll go into Q&A. But yeah, so all the hashtags I saw before, feel free to put it into the chat again, Andrew.
Yeah.
Yeah.
I can see it on the chat, but if you want to throw it into this forum,
yeah. Can you see the chat, Andrew?
Yes. Yeah.
I mean, just read out a few that seems to resonate with you.
Yeah.
I can see one that Tim has said, Joyce, do an instant asset write-off song.
Yeah.
I do have a 296 super song, but it's just not big enough news to release it just yet.
We got bracket creep and weep. Bugger all budget. Let's hexscape. That's pretty clever. Small businesses don't matter. Free to flee. Budget for an election. Where's my stimulus at? Cappuccino crisis. Not a budget. What else we got? SME ignored again. Charmers non-charming. I'm going to give it to. I like bracket creep and weep. I think that's quite clever. Yeah, I want to give an honourable mention. Joyce, you said I could give two, so I'm going to give two.
Okay.
I'm going to give it to Let's Hexscape as well, because I do like a good play on words. That's Amy Gale. And we've got
Shane, I think. Shane Bailey for bracket creep and weep. So amazing. Congratulations to Shane, bracket creep and weep, and Amy for hexscaping debts or let's hexscape. Amazing. Thank you all for participating. I thought everyone was very engaged in the audience in the chat today. So thank you for participating. Okay, on to Q&A. So my first quick question, I guess, is will we ever get tax reform, Andrew? Like, ever?
I don't know. Okay, I get on my soapbox, but I think it's different. Like, with the election cycle being essentially 3 years, it's like government comes in, they got year one, year two is kind of like they get, a bit mean, and then year three is like they got to start gaming for the election again. And it just leaves very little time. I think there's very little political will between the parties at the moment to really kind of do any type of meaningful reform. Like I'll throw up an issue like, inheritance tax. People are going to have very wide different views about that, whether that's appropriate, whether it's not appropriate. But there's no political, will on a lot of issues. We also have one of the most complex tax systems, I think, for a country of our size. And we've got all the state taxes as well, the interaction between states and federal, things like FBT. I don't know. I think there's a few things that could be done that would eliminate a lot of the problems, or reduce the need for a lot of the integrity measures. Something like joint filings between spouses, or deductions under $2,000. You don't need to substantiate, but the second you get over, you have to substantiate everything. An FBT exemption at like $5,000 or something. And then again, if you go $1 over, everything's in. So I think there'd be some things where you can deal with some of these issues. Fixing taxation of trusts about, the present entitlement, just meaning that, you got to pay the money or something. But will it happen? I don't know. Probably not.
You're definitely very skeptical about it. But it sounds like, there's a few quick wins, sort of things that can be done, but it's like, no one's, I don't know, brave enough to even do it. But
no,
I wonder why. It's just
because they get voted out.
thinking.
It becomes, a wedge issue. And it's like this party is trying to tax me or not tax me, or, I think that's what Labor learned with Bill Shorten. Losing what a colleague describes as the unlosable election.
So a lot of people just learned that lesson.
Lost tax policy.
Yeah. So unfortunately, all the accountants and tax agents out there, according to Andrew, you're going to be stuck with the complexity for a very long time, unfortunately. All right. So thank you for participating in our polls. We've just got one more. Let us know where you first heard about us. And Assistant Nugget, can I get you to jump to the student debt slide? Because we just got 2 questions here about that. So James has asked, would you pay out balances before 1 June to avoid indexation? Maybe that's 1 July?
Yeah. Well, it's 1 June.
Okay.
The timer for this is it's debts that are outstanding as at 1 June 2025. So
okay,
I think you'd probably be crazy to make any type of voluntary payment between today and 1 June 2025, because you lose 20% of that basically.
Yeah.
I think there was another question which is about what if payments have already been made to reduce the debt. I don't think there's any relief for that, unfortunately. The thing is with that, it's like, well, then how far back do you go? 6 months, a year, 10 years.
When Andrew paid off his debt.
Yeah.
Second question is also about the student debt, I believe. Is the repayment calculated against adjusted taxable income?
That's a good question. Let me see if I've got the answer to that or not. I don't. It refers to the. I think it would be adjusted taxable income, because that's a concept that's generally used. So I think it would be that. Yeah. And that's like, your income less with FBT benefits thrown in and a few other tweaks to the formula.
Amazing.
The question about JIC, not any news about that not being deductible. No, there's nothing. There's nothing about that. So it seems that all systems are go on JIC becoming non-deductible in July, but yeah, it's not mentioned.
Yep. Yep. All according to plan then. Great. I think we'll get to key takeaways then, and then we can wrap it up from there because there are no other questions.
Yep. Yep. I guess the key takeaways are, I think probably the biggest key takeaway is that sort of structural deficit point. The deficits are forecast to be large as well. And there's very little substance. Probably the biggest thing is this possible income tax cut, which sounds like if Labor lose the election, it's not going to come in. There's the non-competes, which is quite an interesting issue and different opinions about that. And the HECS, the student debt changes. They're probably what I'd say is the biggest ticket items in here. The other thing is if we do have a change of government, there's probably going to be another budget. So, stay tuned possibly for that. If the opinion polls and betting odds are to be believed, it's more likely than not.
Yep. Amazing. Yeah. Always keeping us on our toes, isn't it? The tax system and the politics for sure. All right. Thank you so much, Andrew. And thank you everyone for joining us. Hopefully, even though it was not so exciting, we kept you informed and also slightly entertained. And Shane and Amy, we shall reach out to you to grab your details and send you the mug. Thank you everybody for being such an amazing audience. Hope to see you next time in our next free live event. So thanks. Bye.
Tuning in. Bye.